Hello and welcome to Morning Brief Market Sunrise. I'm Ramzan Karmali, live from Yahoo Finance's studios in London. It's Tuesday, 11th November. Coming up on the show, SoftBank sells its entire stake in Nvidia for $5.8 billion. The longest ever government shutdown looks like it could be close to ending soon. A major blockchain company looks set to go public again. I'll be speaking to one of its co-founders live later in the show. And tariff deals are once again in the spotlight.
You know, we're making a deal with India, a much different deal than we had in the past. So right now they don't love me, but they'll love us. Again, we're getting a fair deal, just a fair trade deal. We had pretty unfair trade deals. They're very good negotiators.
Well, the first thing you need to know is that President Trump is closing in on more trade deals. Well, let's start with India. His comments on India suggest a possible thaw in the trade dispute that has soured relations between Washington and New Delhi. Remember, higher tariffs of up to 50% on many Indian goods came in because the US wanted India to stop buying Russian oil. In recent weeks, Trump has said that Indian Prime Minister Narendra Modi had pledged to wind those down. Moving on to Switzerland, and again, Trump told reporters that he was working on a deal to lower tariffs. Various media reports suggest that the tariff on Swiss exports could be cut to 15%, matching the rate that was imposed on EU exports to the US. The next thing you need to know is that investors are looking for a crack in AI, and they may have found one overnight. Coreweave, just one of the firms whose rapid growth has been fueled by that AI boom, reported Q3 results that beat Wall Street estimates but issued weaker full-year guidance. Its shares are tumbling in the pre-market this morning, down almost 10%, and weighing on Nvidia and reviving those AI jitters has spread among investors last week. Now, Coreweave rents out Nvidia's GPUs to cloud providers like Google and Microsoft. Coreweave admitted that a third-party developer partner was behind schedule in building new data center capacity. Investors and analysts clearly didn't like what they heard, including JP Morgan, who cut the stock from overweight to neutral. And the last thing you need to know is there looks like there is light at the end of the tunnel when it comes to the government shutdown. A new bill to end it was released, quickly advanced by the Senate and then approved last night. The bill has now been passed onto the House of Representatives in what could be the end of the government shutdown in the coming week. House consideration could begin as soon as Wednesday. In the meantime, thousands of flights are still cancelled today. Okay, well, let's have a listen to Josh Lipton, who's got the what to watch.
Time now for to watch Tuesday, November 11th. We're going to start off on the earnings front. We're going to be getting more earnings on Tuesday. This time, reports from Alcon and Oklo. Oklo announcing results for the third quarter after the markets close, and anticipating that Oklo is getting closer to turning its first small nuclear plant called the Aurora Powerhouse into a real working project. Investors will be listening closely to the earnings calls for any commentary from management about progress on the Aurora project and other pilot programs supported by the Department of Energy. Taking a look at the Federal Reserve, more commentary coming in on Tuesday from Fed Governor Michael Barr. This is coming after comments from Fed Vice Chair Philip Jefferson on Friday. Jefferson saying that the Fed should proceed carefully now that rates are closer on a neutral level, one that neither slows nor boosts the economy. And checking in on small businesses, the NFIB Small Business Optimism Index is coming out on Tuesday. Economists forecasting that number to dip slightly compared to last month to 98.5, signaling that small business owners are slightly less confident about the economy and their own business outlook than they were in the previous month.
Well, the big news out overnight in Asia was that in a surprise move, SoftBank sold its entire stake in Nvidia. Nvidia shares are down in the pre-market around 1.5%. Now, on the flip side, SoftBank shares rose around 2% in Tokyo. SoftBank also sold part of its stake in T-Mobile for over $9 billion. The revelations came as SoftBank reported that second quarter net profit more than doubled to $16.6 billion, driven by valuation gains in its OpenAI holdings. It sees its stake in OpenAI as vital as it's keen to become a leading player in the AI ecosystem. But its exit from Nvidia coincides with a growing debate about whether spending by big tech firms like Meta and Google, which is expected to ease past $1 trillion in the coming years, will produce significant returns. SoftBank founder Masayoshi Son would argue he needs the money for these sales to help bankroll future AI investments. His portfolio not only includes OpenAI, but ByteDance and Perplexity. Those stakes have really boosted SoftBank's paper gains and helped SoftBank shares rise over 200% in the last 6 months. And don't forget, SoftBank has invested in a number of projects that include the Stargate data center rollout, as well as a $1 trillion AI manufacturing hub in Arizona. And earlier this year, it even explored a takeover of US chipmaker Marvell Technology. Well, selling this stake in Nvidia makes it look like SoftBank is betting big, and it's clearly hoping that OpenAI will give it a winning return. Okay, we're heading for a short break now, but stick with us. We'll be talking to the executive chairman of the Web3 giant, Animoca Brands. Welcome back. Now, Web3 investment giant Animoca Brands is planning on going public once again. The Hong Kong-based crypto investor and blockchain developer plans to go public on the NASDAQ stock exchange through a reverse merger with Current Group. Now remember, the company was delisted from the Australian Securities Exchange back in 2020. Well, I'm pleased to welcome to the show Yat Sui, Executive Chairman and co-founder of Animoca Brands. Yat, thanks so much for joining us here on Yahoo Finance. Well, before we look at that merger in closer detail, SoftBank is in the news today. It's also invested in Animoca Brands. Can you tell us a bit more about that?
Yes, of course. SoftBank actually became an investor through us actually from the conversion of Sandbox, who actually they were one of the very few crypto investments that they've done in the past. And together with companies like Galaxy and other ones that are around have basically taken stakes. So we've got some of the biggest institutions in Animoca Brands, basically focusing on everything crypto, tokenization, and altcoins.
Now, let's look at the merger now. Can you explain how this reverse merger will actually work with Current?
Yeah, I mean, basically what it means is that Animoca is going to be owning 95% of the stock of Current in the terms of reverse takeover, which means there'll be obviously a dilution. So that means Current shareholders will own 5% of the company and Animoca Brands shareholders will own 95%. In the reverse merger, we're basically taking over parts of the business. So it isn't like a classic shell takeover, shall we say. There's an actual operating business that actually is also strategic. Currency Group is actually a fintech company. They service millions of customers that are actually quite sort of tactical to, from our perspective, from crypto and token delivery. So it's actually a very strategic merger of really two companies that are trying to make a difference in the world of finance.
So does this mean that the regulatory environment now is better than it was back in 2020 when you had to delist in Australia?
I mean, yeah, do I have to say Trump? I mean, obviously, everything in the world of crypto, in many ways, thanks to Trump, has completely altered and changed, and the U.S. is leading this charge, which is also the reason we're looking at markets like the NASDAQ in the U.S. Because a few years ago, we basically had to stay away from the U.S. market because it was just not a very sort of nice environment, and that's all changed. And it's very clear that your current president really wants to make America the crypto capital of the world. It also has very deep financial pockets, clearly. You can see this from very successful listings from the likes of obviously Circle and Gemini and Bullish, right? And it's a global business, but of course, global markets do reside in America, and that means we have to be here as well. And so this is a natural path for us, we believe.
Now, lots of stablecoin firms are doing particularly well right now. I mean, and also Visa have literally just announced that they'll allow stablecoin through their network. So more traditional names are even getting involved. Is this the best part of crypto to invest in right now, in your opinion?
Well, I mean, I would say stablecoins. I mean, we, for instance, have a joint venture as well in Asia, around the topic with Standard Chartered and Hong Kong Telecom. But broadly speaking, we think the biggest opportunity is in altcoins, which is what Animoca represents. And the reason why we say that is because Bitcoin obviously is always going to be like the sort of digital gold equivalent, the largest asset class. It's not going to exceed that of the companies like the Nvidias and the Googles and the Yahoos that you mentioned, right? Which is represented in altcoins because all the usage is coming from altcoins. But it's very similar to the internet market back in 2000 and 2001, sort of very early stage. But today, collectively, they're about $128 trillion compared to gold's $27 trillion. And that's what we believe altcoins represent. So we think the largest growth potential sits in altcoins, but it is also the more volatile. And that's where Animoca Brands comes in, because we are probably the largest investor, or certainly one of the top three, and are kind of built like an altcoin index, generating yield and profits and revenues from it.
Now, you talked there about volatility. What have you made of these recent big swings we've seen in the crypto world?
Well, I actually think crypto is more representative of this true state of global volatility. I mean, one of the reasons why volatility seems a little bit less volatile is because you have trading hours, you have holidays, you have all that kind of stuff, right? But when you take a look at the real world, I mean, think about how number of people who lose their jobs every week and gain new jobs, or how many businesses shut down every week and start every week. Actually, it's very volatile. It's just not something we represent. We see it as a sort of annualized index, and it feels like 2%, 3% seems pretty stable, but is anything but stable when you measure it on a regular basis. And crypto just highlights that. It's just something that we see as a more natural truth to the capitalist world we live in.
And just finally, very quickly, do you see AI as a threat to blockchain?
Oh no, it's an absolute opportunity. I mean, again, not to say that this was necessarily SoftBank's thesis point here, but tokens are essentially the currency of AI. I mean, if you're not tokenizing, you're not going to be AI readable. In the same way that if you were not on Google or Instagram or TikTok, you don't become sort of internet or social media readable to that generation. AI basically is going to read tokens. If you as a business aren't thinking about tokenization in the future, you become invisible to AI. And that really becomes the real problem. So the whole world has to tokenize. And that's what we're here to help serve and develop.
Yeah, so from Animoca Brands, many thanks for joining us here on Market Sunrise. Okay, and we're heading now for another short break, but stick with us. We'll be back with trending tickers. We'll be taking a closer look at some of the Swiss stocks that are moving because of that potential trade deal. Time now to look at the stocks that are trending this morning, from Japanese tech to Swiss luxury, and big after-hours moves on Wall Street. New York listed shares of Sony are on the move after the company raised its full-year profit forecast by about 8%, citing lower tariff impact and strength in anime and content. Moving over to Europe now, and Swiss stocks are higher this morning on hopes for a deal with the US that would lower tariffs on Swiss goods. Two examples: Swatch up more than 4%, and Richemont, the owner of brands including Cartier, Van Cleef and Arpels and IWC watches. Both companies are in the green, as the ability to export to America with lower levies would certainly make their businesses a whole lot easier. And don't forget, the US news comes at the same time as signs of a rebound for luxury demand in China. Now, before we go to the US, you may remember that the British pharma company AstraZeneca, which has been negotiating directly with President Trump, posted record revenue last week. Well, the CEO presented those results here on Market Sunrise. Well, now AstraZeneca has become the largest UK company by market cap, surpassing HSBC. As you can see, the stock has been on a roll since the latest earnings. And remember, AstraZeneca is also preparing to list in New York. Finally today, Wall Street is set to open off the back of a slew of high-profile earnings calls last night. So here are the after-hours movers you need to know about. Rocket Lab is popping in pre-market after reporting a 48% year-over-year revenue increase, reaching $155 million. The aerospace company just successfully launched its latest image-taking satellite, and it has 49 launches on contract, indicating very strong demand and further growth prospects. We're also keeping an eye on eToro. The trading platform is also a popular buy this morning after beating analyst consensus and announcing a share buyback program. And finally, quantum computing has been a very popular speculative trade this year, at least for now. After reporting earnings, Rigetti is sliding in the pre-market, even though it reported a smaller than expected loss. But revenue was down significantly from last year, just under $2 million. This is a reminder for investors that quantum might be popular, but the income it generates is tiny compared to the current valuations. And another big earnings print that was closely watched yesterday was Paramount Skydance. It was the company's first quarterly report since the merger between the two media giants. And the stock is up around 5% in the pre-market, 4.5% in the pre-market. Ken Leone, Director of Equity Research at CFRA, broke down the report with my colleague Josh Lipton.
It becomes a little problematic in terms of funding, whether Paramount has available capital to make this kind of deal. Even with reducing debt for Warner Brothers Discovery, you're talking about $33.5 billion. Obviously has some great franchises. And Paramount has probably, in today's print, about $2.5 billion of cash, $13.5 billion of debt. So it's either going to be some equity fusion or funding, coming into Paramount to make this kind of bid, or they have perhaps some partners.
Would you maintain your buy, Ken, on Paramount if a deal with WBD didn't get done?
We have a buy on the stock, and Paramount, with obviously new ownership, new management, has talked about each of the initiatives they have to drive growth, but also higher EBITDA or cash flow. So that buy stands on the basis of what Paramount can do as a standalone company. If we were to see the deal, obviously we'd have to take a look. It's interesting. No stock in movies and entertainment has actually shown a positive in the last couple months. Only Warner Brothers Discovery, because of the rumors of buyout. And unfortunately, Paramount hit a high of over 20 and is back at 15. So we're basically staying the course. Fundamental outlook, new management, and improved performance just for Paramount.
I'm curious, Kenny, let's say they could work out a deal. I wonder how you think regulators would feel about it. I mean, would Washington, what's your best guess? Would they green light such a deal, Ken? I mean, would regulators feel like, listen, M&A in this sector is just inevitable?
Yeah, it's a great question, Josh. And we've been around the block on this topic of regulation. If you recall, weeks ago with Disney, Jimmy Fallon, and of course the NFL taking the 10% equity, the FCC was really important. The FCC is still important, and that was related also to local broadcast TV. Here, of course, with CBS, and Paramount does own other local TV stations, it looks like the Trump administration will be kind of the lever to kind of open up these kind of restrictions. But certainly there's going to be some review of any merger of this size. The question is, would it be the FCC or the Department of Justice?
And we couldn't close the show today without mentioning Warren Buffett. The legendary investor said in a letter to shareholders that he will be, quote, going quiet after stepping down as CEO of Berkshire Hathaway at the end of this year. Well, Yahoo Finance's head of news, Miles Udland, explains.
Well, the fact that Buffett's not going to be writing the annual letter anymore or speaking at the annual meeting, that had been reported. So we sort of knew that this was coming in a way, but this morning's or this afternoon's message really kind of reinforces this reminder, I guess I would say, from that first weekend in May, that this era is now over. I mean, the first Berkshire Hathaway annual meeting that I attended in person was the 50th. This year was the 60th. And I don't know about you, Josh, but I'm kind of feeling a little nostalgic here, being like, I guess that was it. I guess that was the 10-year run that I enjoyed with Warren Buffett. Of course, his shareholders have enjoyed a 60-year run. Those who have been with him that long have made many, many, many multiples of the money they invested if they kept it with him all those years. But I think it's just, and Buffett said it in his letter today, talking a little bit about Father Time remains undefeated. I believe the exact phrase was, Father Time has grown more interested in me at my current age. And he, of course, turned 95 back in August. And so I think, as you mentioned, there's the particulars around it. He has said he's going to give away, 99.9% of his wealth, and that's almost all in the form of Berkshire Hathaway shares. So those will be gifted to various foundations over time. And he needs to outline that schedule, right? That's liquidity into the market, even though they're gifted shares. People know that this is happening. And that is important for existing shareholders, folks who want to remain shareholders of Berkshire. But outside those practicalities of details, again, I kind of just think about it as someone, who I think, like a lot of young business journalists, one of the first things you do is, your editor's like, hey, you should figure out what you think of Warren Buffett's deal, right? You'll learn a lot by going back and reading everything he said. And he said today, he's kind of said it all.
You point out in your piece here, Miles, since Buffett announced in May that he would step down at the end of the year, Berkshire stock has dropped about 5%. The broad gauge, the S&P 500, it's up over 20% during the same period. What is going on there, Miles? What do you think helps explain that? In part, do you think it's because Buffett is handing over the reins?
Yeah, I think it's absolutely part of that. Now, another significant thing to note, and though Berkshire has dramatically pared its stake in Apple, Apple is one of its biggest equity holdings. And so there is some element of the value of Berkshire Hathaway that is like that portfolio holdco, idea, right? And so, as we've talked about, Apple's, had a better moment recently, but has been one of the laggards this year among the Mag 7. So that's a piece of it, but it's clearly a notion from investors that there was obviously some level of a Buffett premium in the stock. Now, again, Berkshire Hathaway has a massive industrial operation. It throws off a ton of cash. They have a huge securities portfolio. They have a ton of cash themselves. I think that's the real question. I believe you and I discussed this not too long ago. That's the real question for Greg Abel into next year and beyond, is what's he going to do with 300 billion plus in cash on Berkshire's balance sheet. But yeah, there's no question. I mean, obviously, if Warren Buffett's running your company, there's going to be a premium assigned, to his leadership there. But we've now seen it in real time, that 25 percentage points roughly worth of underperformance from Berkshire since he announced he's stepping down. On the one hand, it's not surprising, kind of obvious that there would be some level of a Buffett premium, right? But to see it actually happen, I think, is, again, Berkshire entering a new phase as a company, as a stock, all these different things that now change because Warren Buffett is, not the person essentially backstopping the whole thing. Whatever your reason was, right, for owning the stock, he was some part of that, and that has now changed, and it's going to formally change come January 1st.
All right, before we go, let's check in on the markets. Now, Bitcoin is easing back after hitting a week high overnight. There's some concern around US-China trade tensions possibly resurfacing after the Wall Street Journal reported that Beijing plans to ease the flow of rare earths to the US via a system that will exclude companies with ties to the US military. Gold next, and the price of the safe haven continues to rise, well away from the $4,000 mark, but still way off its recent highs of over $4,300 an ounce. On to Asia now, and markets here had, kind of a wobble today. Yes, there was relief that the government shutdown could end soon, but on the other hand, there's still nagging worries about tech valuations resurfacing. The Nikkei in Japan was dragged down by semiconductor stocks in particular. Traders were also unsettled by a sharp fall in South Korea's currency, the won. And remember, in China today, it's Singles Day, and that's the biggest shopping day in the entire world. Okay, let's move over to Europe now. And a bit more of a positive picture here, but just look at the FTSE 100. It's outperforming most of the markets there, and that's because of some weak job data that we had here in the UK, and that's weighed on sterling, which has helped bolster those London-listed multinationals that benefit from a softer currency. And the Bank of England's also expected to cut rates now a bit more quickly. And finally, let's have a quick look at Wall Street as well. And stock futures there are leaning slightly lower in the main, slipping back from a rally fueled by optimism that Washington may soon end that record-breaking government shutdown. Okay, that is it for Market Sunrise for this morning. Stay with Yahoo Finance for continuing live coverage of the markets and your money all day on streaming and online. And make sure you've got your calendar marked for Thursday, because we're going to have our big flagship day, Invest, where lots of leaders from business, including from the worlds of AI and crypto, will all be here. Okay, that's it for Market Sunrise. I'm Ramzan Karmali. Go own the morning.